Welcome to Silicon Valley Asian Business Talk.
Hello, everyone. This is Roger Chen from University of San Francisco Center for Business Studies and Innovation, Asia Pacific. Welcome to join our interview program. We want to thank you for the support.
All right. Thank you, Roger. Thank you for inviting me to this session. My background, I grew up in India and came here for my master's in the early 80s in computer science, and then moved to, and that was at Virginia Tech on the East Coast. I then got my first job at Intel. I went to a college in India called BITS Pilani, which is considered to be India's #1 private university for science and engineering. Intel was like the dream company. I was fortunate to get a job there. So about 10 years into Intel journey, you're surrounded by a lot of entrepreneurs here in Silicon Valley. And, I decided to, begin my own journey with a company called Sierra Atlantic. And, that grew to be a fairly substantial size company, about 2,500 employees worldwide over a 17-year period. And, through the course of that, we raised capital from some of the Sandal Road companies, venture funds. So that's kind of my background as a tech entrepreneur. And I've also been spending considerable time in the nonprofit sector starting 2010-11. Both here in the US and also in India. And a good part of my time also goes into working with tech startups, mostly young first-time founders, helping them build their companies, mostly as an early investor, angel investor, but sometimes I get more actively involved with them, serving on the boards and all that.
Discussion topic: startup exits, IPO or merger and acquisition.
IPO, acquisition, these are two common successful exits. So I am not sure, if you have any kind of thoughts on the difference of building these two types of a company, like building acquisition target versus building IPO company. Are there any kind of a difference in building or growing these two types of a company, or there's not much difference?
Yeah, I know a lot of people, have a perspective that may or may not be in sync with sort of my view on this. I always felt you have to build a company to be a high quality public company someday. Then the right things will happen. Don't worry about whether you are a good acquisition candidate or not, because all the things that go into building a high quality public company, sort of a, character, if you will, of a company, I think are the same thing that'll also make it attractive as an M&A candidate.
Okay.
So don't focus too much on IPO or M&A. Then that would be my view. But oftentimes in the technology space, people do talk about, okay, here are the two big likely buyers for it, and well, that's great if that happens. But there may be other buyers that you're not seeing because they want to get in this space or something else, right? And for all of them, the more you look like a well-run, well-oiled machine that has a predictable revenue engine, the right culture, customer retention, the obvious unit economics and all of that, then that makes you very attractive for an M&A. Whether IPO happens or not, and so that's what I would say. Yeah, but
that's
it's
great.
true that a lot more companies get their liquidity exit through M&A than IPO. No question about it. Yeah.
Thank you for watching.